Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Foreign portfolio investors continue to be net buyers in the Indian debt market, pumping in nearly 16,500 crores in this month. In fact, they were net buyers in the month of January of about 19,300 crores, totaling this year's purchases up to 36,000 crores. They were also net sellers in the equity market of about 30,000 crores. Ahead of India's inclusion in the global indices and our fiscal deficit remaining under control, this raises a question: can there be an opportunity in debt funds? Join us this Saturday where we understand and explore the opportunities in longer duration gilt funds.
Thinking beyond taxes. I meet a lot of investors who are holding investments in mutual funds which have done exceptionally well. You know the spaces: mid cap, small cap, micro cap. Some thematics like PSU, infra, they've done extremely well. But they are in a very peculiar dilemma right now. Some people ask me what they should do with, let's say, micro cap or small cap. I said that you need to first evaluate what is the size of your position in your portfolio, how much of your portfolio is exposed to this theme, and based on that decision, you have to think how much is a conservative level or the correct level to own in your portfolio. Obviously, you must have bought a reasonable percentage and it is appreciated beyond what you expected it to do. So, it is important that you capture the profits. You ensure that you take some profits and keep it ready to be invested if you see a better opportunity or if you are presented with a market fall. The immediate reaction I get from people is, oh, but I have to pay taxes. Well, if you make profits, you have to pay taxes. If you don't want to pay taxes, either your profits may actually go down again, or you may not have profit at all. Both those prospects are there depending upon at what level you have entered these themes. But the unwillingness to pay tax becomes the primary decision driver in an investment. I think that's not the way to invest. That's a very dangerous way to invest. And investment decisions of buying and selling must be taken on the merit of the investment, on the prevailing valuations and the prospects. But when you are going to push all these aside and say, oh, taxes, I need to avoid them, then you are making decisions on the wrong incentives. This is especially so with people who are much richer actually. Those who are having larger portfolios, much bigger positions, are more obsessed about this than, let's say, a small investor. But everybody has this in different degrees to varying extent, and this feeling tends to bias their decisions. This is something every investor has to avoid now. There are some parts of the market where you need to take some money off the table. If you have to pay taxes, so be it. It's your duty to capture the taxes as a cost and ensure that you capture the profits for the future. If you are not willing to reconcile tax as a cost, you are not going to take advantage of the profits before you. And later, the likelihood of your regretting not acting on time is very, very high. And regret is an emotion which investors must always proactively avoid. If you make all the decisions that you need to make in good time, then in a bad time, you will not need to waste too much time in regret mode. Most people I have seen who are very stubborn about not selling simply because of taxes in a bull market are very, very regretful in a bear market. I wouldn't want any of you to be regretful in a bear market. You must be greedy in a bear market. But by being greedy and not being willing to pay taxes in a bull market, you are setting yourself up for being regretful in a bear market and missing out on the opportunity to be greedy when markets are trading low and valuations are extremely attractive. What you do when valuations have gone overboard and are in frothy zone will determine what you can do when valuations are extremely attractive. If you fail to act on time, then when the times are good, you will be unable to act. Every investor needs to understand this and think beyond just avoiding taxes. Thank you for watching this video.